Greetings of the day. A very good afternoon. Today we will discuss the provisions of the Income Tax Act 1961. We have a codified income tax law from 1961. Prior to this Income Tax Act 1961, we had the Indian Income Tax Act 1922, pre-independence era. 1922 to 2020 approximately makes it a 100-year long duration. So in effect, we have a codified income tax statute in existence for about 100 years. Prior to the 1922 Act also, we had Income Tax Act in our country. I do not intend to go into the history of this legislation. It is equally important to note that this Income Tax Act 1961 is about to be rescinded, that is cancelled. The government has already formed a committee which should furnish its recommendations and deliberations very soon. The new act replacing this Income Tax Act 1961 is sought to be named as Direct Taxes Code. It may see the light of the day very soon. It was proposed and recommended by this government. It is important to compare, even for a bit of a purpose, it is important to compare the Act of 1922 and the Act of 1961. Most of the provisions of the Income Tax Act 1922 had been bodily lifted and grafted in the Income Tax Act 1961. Even today, we refer to several judgments of the Income Tax Act 1922 in the appeal proceedings and also in the assessment proceedings. This being the fact as it is, it should not surprise us if the major provisions of the existing Income Tax Act 1961 get bodily lifted and incorporated in the Direct Tax Code whenever it is published as a law. Having stated this, let us come to the nitty-gritties one by one. If you see the Income Tax Act 1961, the BAR Act, the manner in which the term income tax is stated in the Act needs to be understood. The Income Tax Act is stated as income hyphen tax, meaning it is one word, as against the British Income Tax Act, where there is no hyphen in between. The hyphen doesn't join the two words income and tax in Britain. Therefore, there you have two words, income and tax, appearing separately. Whereas in our country, we have income hyphen tax, meaning one word. The legislation that we are seeking to study, the Income Tax Act 1961, is an extremely complex piece of legislation. In terms of its complexity, it is comparable only with the constitution, the mother legislation of any country. Our constitution is a very, very vast document. So is also the Income Tax Act 1961. As far as the last number of the section goes, the last number of the section is 298. But that doesn't mean there are only 298 sections in the Income Tax Act. If you see the number of sections, the chronology in which the sections appear, the total number of sections exceed 850. Why do I say this? For example, you have section 10. You also have section 10 capital A. Really speaking, these are two sections, 10 and 10A. So if you count the number of sections which a student of income tax would be otherwise required to grapple with, the number is more than 850 sections. Let me dwell on this a little more. Each section, many of them in fact, has several subsections or sub clauses and also clauses. We will come to the clauses part a little later. In the count of 850, the subsections in a section are not included, in the sense that, for example, section 263, it has about, I think, 5 subsections. So when I say section 263, I do not include the 5 subsections in the 850 count. I include only section 263. In other words, subsections are not included in the count of 850. As I stated earlier, a section may have clauses. Again, the clauses of the section are not included in the count of 850. Nobody has still come out with a number when the subsections and the clauses also would be included in the count of the sections. When we count the sections, we only have the sections without including in that count the subsections or the clauses appearing in a section. Now let us come to Income Tax Rules 1962. I will dwell on the rules a little later. Let me come to the number of rules. There are the last number of the rule in chronology is 129. But again, in rules, for example, if we have rule 6, we have rule 6a, 6b, 6d, 6dd, 6f. Count each of these rules. Mind you, I am not referring to sub-rules. They are rules by themselves, named as Rule 6D, Rule 6F, and so on. So the number of these rules will be around 550 approximately. Now come to the total count. 850 plus 550, around 1300 to 1400 sections and rules put together. Now you may have a fair idea of the complexity which this act poses. I will come back to complexity a little later. I intend to introduce rules for a better comparison. Though the Bombay University syllabus does not require us to study the rules, but then they are equally important as the sections. A bit of legal analysis will go into this play or understanding. The parliament is the body which frames the act, the legislation. The parliament frames the act. It is important to note that the government does not make the law. It is the parliament that makes the law. Of course, the government will propose. That's a different issue. But the government does not sanction the law. It is the parliament which is the sanctioning body, which is the law-making body, the legislature of this country. Therefore, the Income Tax Act 1961 is framed by the parliament. Each word appearing in the Income Tax Act 1961 has the consent of the Parliament. Now you would realize that the Parliament has framed the larger arena, has provided a larger arena of taxability via the Income Tax Act 1961. Now, to achieve the objective of this legislation, the Income Tax Act 1961, the executive, the Central Board of Direct Taxes, CBDT in short, is entrusted with the function of making the rules. It is purely a government body. The rules have a purpose of clarifying, in a way explaining the provisions of the Act. They also ensure as to how the purposes mentioned in the Act in the various sections can be achieved by the assessee. Therefore, rules, it should be noted, are not made by the Parliament. The rules are made by the executive. There is a clear distinction under the Constitution between the legislature, the executive, and the judiciary. Someday we will discuss an interplay of these important constitutional functionaries. So the CBDT makes the rules. Apart from these rules, the CBDT also comes out with several notifications, office memorandum, clarifications, circulars, press releases on a daily basis. Coming to the issue of complexity of this legislation. As discussed earlier, we have around 1300 to 1400 sections and rules under the Act. We have judgments being pronounced by the Supreme Court, the various high courts, the various tribunal benches, and also the CIT appeals, Commissioner Income Tax Appeals, on a daily basis. So, to be able to truly understand the position of law in respect of a section under examination, we need to have a clear understanding of the case laws, the CBDT releases, and also the text of the section. Taxman site has hitherto published 80,000 judgments. ITAT online has published more than 2 lakh judgments. Mind you, all the judgments of the high courts all the judgments of the Supreme Court, tribunal benches, and CIT appeals do not get published in the public domain. Please understand that the Supreme Court itself has envisaged and clearly understood the importance of income tax cases. It has formed special benches. You should know this. It has formed special benches. Judges have been dedicated for the special purpose of hearing only tax cases, income tax cases. If I remember correctly, those benches sit, if I remember correctly, at least thrice a week. That brings out the importance of the Income Tax Act. Now we will go to the definitions appearing in the Income Tax Act. Whenever you study a codified law as income tax, it will deal with several terms, several issues will be dealt with by by the act, by the statute. In income tax, section 2 deals with the definitions. There are various clauses in section 2 which deal with the definitions. It is important to note that definitions generally appear in section 2. It is only generally and not always. There are several terms which are specific to a section, which are specific to an issue. This is more so in case of international taxation. So, the terms used in international taxation generally are not found to be defined in section 2. There are specific terms peculiar to international taxation. They are defined under the sections related to international taxation appearing as a part of Income Tax Act 1961. For example, arm's length pricing, associated enterprise, international transaction. These are the terms not used generally in domestic taxation. These are the terms used generally in international taxation. So these terms and other terms are defined in the sections relating to international taxation. So once you read section 2, once you go through and understand all the definitions of section 2, that doesn't mean you have understood all the definitions. Other definitions appearing in the specific sections need also to be lend credence to. Now, an important issue may arise for consideration. When a term is defined in the act, we ought not to refer the dictionary for understanding that term. We need to restrict ourselves to the meaning given in the act. We cannot go beyond the meaning of the term available in the act. We will discuss this at length a little later. Come to the terms which are used in the act but are not defined in the act, neither in section 2 nor in the specific sections. For example, the word end. For example, the very first English alphabet A. Innumerable times these words appear in the sections, but they are not defined. A is not defined. And is not defined. So, when these terms are used in the act, and since it is a very specific legislation, if the word is not defined in the act, where do you go to understand the meanings of those terms which do not appear in the act? Obviously, to understand those terms, a recourse has to be made to the standard English dictionary. So, when a word appears in the sections, appears in the provisions of the act, and if it is not defined, to understand the term, we ought to go to the English dictionary. So, in simple words, if a term is used in the act, understand the term in accordance with the meaning given in the act. If a term is used in the act and if it is not defined, refer the dictionary. It will be interesting to note that there are several commercial usages. For example, sales, goods. These are not defined in the Income Tax Act. Therefore, you may go to the dictionary. That is okay. But then, please understand, we also have, earlier we had Sale of Goods Act. We have VAT. Both of them have now been replaced by GST. We now have Goods and Services Tax, where goods and sales get defined, services get defined. So when we understand, or rather when we are confronted with these words, sale, goods, in the Income Tax Act, the meaning of these terms appearing in a central legislation, the Central Sales Tax Act, would have a lot of persuasive value. I do not say that these terms, as defined in the GST legislation, have to be understood in the similar manner in income tax legislation. Please understand, that is not the intent. The terms used in the Act, Income Tax Act, and defined elsewhere in a central legislation will have persuasive value for income tax interpretation. Please understand, when Income Tax Act uses certain terms, it may refer to other central legislations specifically, where the terms used in Income Tax Act may be explained in the sense that a company is defined in the Income Tax Act to mean a company which is incorporated in India. The Companies Act, now 2013, earlier 1956, deal with the meaning of companies. So to understand company, for the purpose of Income Tax Act, a recourse is allowed to the Companies Act. Similarly, the transfer, definition of transfer, refers to transfer as defined in Transfer of Property Act, TOPA. Transfer of Property Act. So here a specific reference is made by Income Tax Act to the provisions of TOPA to understand transfer. Then we have to restrict our understanding of transfer in accordance with TOPA. It is not a question of TOPA meaning of transfer having a persuasive value. We have to understand the word transfer in accordance with the meaning of transfer given in Transfer of Property Act. This is a very primal introduction of transfer which I am giving to you. Section 2, Clause 47 and Section 47 deal with transfer. We are only trying to understand that when a word is used in the Income Tax Act, and to understand that term, reference is made to another act, then you need to refer to that another act. There is no question of the meaning of that word in that another act having only persuasive value. It is the value even for income tax purpose. It is the meaning even for income tax purpose. I hope I am making things abundantly clear. Definitions, by their nature, can be inclusive or exhaustive. An inclusive definition is one which defines a term inclusively. An exhaustive definition is a definition which defines a term exhaustively, completely. Now, this is the general understanding of a definition. The definition does not say that it is an inclusive definition. The definition also does not say that it is an exhaustive definition. Then how do you understand whether a definition which you are reading, which we are reading, or which we are understanding, is an inclusive definition or an exhaustive definition? The words used in a definition determine whether the definition is an inclusive definition or an exhaustive definition. There are certain typical words appearing in a definition. One of them is means. When definition includes the word means, the scope of the interpretation of that definition is restricted. It is an exhaustive definition. You cannot go to understand the term, you cannot go beyond the meaning available in the section. We have to restrict our understanding of those terms to the meaning given in the section, in the definition. Restricted, exhaustive meaning, nothing more, nothing less. The another word commonly found in a definition is includes. For example, income includes. Assessee means income includes. So when includes appear in a definition to define the term, the law is only trying to give us illustrations, examples of what could fall under the definition, of what could be included in the definition. Mind you, that list appearing in the definition to explain the term is not complete. It is not an exhaustive list. It is interesting to note that subsection 24 or subclass 24 of section 2 defining income is defining income inclusively. It gives instances, examples of what could be included in the meaning of income. More such illustrations can be added to that list. So, to understand a definition, we need to understand firstly the words used to define the term. To summarize, when it includes means, meaning is restricted. When it states includes, the meaning is widened. We will discuss the relevant definitions peculiar to your syllabus sometime later. Come to heads of income. There are 5 heads of income. Sometime back there used to be 6. but interest on securities as the head, as a head, has been eliminated. So you now have only five heads of income: salary, income from house property, profits and gains of business or profession, peculiarly known as business income, capital gains, and the residual head, the income from other sources. These are the five heads of income. Please understand, each head is typical such that it has its own criterion or conditions to admit incomes under that head. The criterion or the conditions appearing in one head are not found to be prevalent in the other heads. For example, the conditions to admit income under the head salary, I'll give you those. Employer employee nexus is a condition to admit income under the head salary. This condition, employer employee nexus, is not found in the other four heads of income. Conditions are peculiar to the head such that they are not found in the other heads. This is so for each head of income. Peculiar conditions for admissibility. But let me raise a very interesting issue. Having stated, I'll give you in brief the conditions for admissibility of incomes under each of the heads so that you are able to understand the comparison, the question better, which I will give you a little later. Salary condition is employer employee nexus, primary condition to exist, employer employee relationship. Income generated by that nexus is chargeable only and only under the head salary. Income from house property, ownership of the house property is pivotal, is important. Income generated by the owner of the house from the let out of the house is chargeable under the head income from house property. In short, rental income, ownership. Business income. This is the most litigated head. To admit an income under the head business or profession, there has to be income from business, and business is inclusively defined as trade, commerce, or manufacture, or any adventure or concern in the nature of trade, commerce, or manufacture. This will require detailed discussion, which we will have later. So, to admit an income under the head business income, profits and gains of the profession, there has to be income from business or profession, income from the activity of trade, manufacture, or commerce. Capital gains. Capital asset sale yields or gives capital gains income chargeable under the head capital gains. So there has to be in existence a capital asset transfer. One of the modes of transfer is sale, of which transfer of which results into capital gains. Please bear these conditions very well in mind. Salary, employer-employee nexus, income from house property, ownership and let out, generally, business income, trade, commerce, manufacture, capital gains, capital asset in existence and transfer. We now have the fifth head, residual head of income from other sources. Please understand, if an income does not meet the criterion of salary, if an amount that you have received does not meet the criterion of salary, and house property income and business income and also capital gains income, it doesn't meet the criterion mentioned in these heads, but the fact remains that it is an income. The fact remains that it is equally an income as defined in section 2 clause 24. So then such an income which does not meet the criterion or the conditions of any of the four heads listed above, but it is an income, it will then be brought to tax under the residual head, income from other sources. So anything which is not salary or house property or capital gains or business income, but it is income, will be brought to tax, will be included under the head income from house property. Some time back I referred to a question which you should be able to answer. To lay the background once again for me to frame the question, each head, as we have discussed, has its peculiar typical conditions, as we have discussed. Does it mean that an income that you have received will meet the conditions enshrined only in one of the heads? In very simple words, conditions are specific to the head. Does it mean that an income which you have received has only and can only satisfy the conditions of one of the heads? In other words, can you think of a possibility of an income? There is an income, but it simultaneously satisfies the heads of conditions of two heads. An income simultaneously satisfying the conditions mentioned in two sections, two heads. For example, sale of shares. Shares are generally held to be capital assets. So sale of shares would result into income chargeable under the head capital gains. But there may be a person who may be involved in the business of shares. So the profit generated by that person from sale of shares can also satisfy simultaneously the conditions enshrined in the head business income. So in other words, sale of shares get equally attracted to capital gains head and also to business income head. If that be the case, under which head should this income from sale of shares be brought to tax? As a lay person, we may think, where is the question of including the income in one of the heads? I have an income, I will pay tax and finish it off. But this may be a very layman's understanding of income tax. But it is not that easy. Nothing in income tax is easy. Nothing at all in income tax is easy. Please understand that some heads have typical rates of income tax. Some heads of income, basically capital gains. The income falling under the head capital gains from sale of shares, which are short-term capital assets, is chargeable to tax only at 15%. Whereas the income falling under the head business, if it were from sale of shares, is chargeable to tax at 30% in case of individuals. Now compare. A person who has made a gain on sale of shares which he has held for a short-term period, the gain may be rupees 10 lakhs. If this 10 lakhs is offered to tax under the head capital gains, 15%, 1,50,000 rupees only would be the tax liability. Whereas if this income is considered 10 lakh rupees capital gains or the gains is considered under the head business income, 10 lakh rupees business income, 30%, 3 lakh rupees will be the tax liability in case of an individual. Double tax. 1,50,000 if it were treated as capital gain, 3 lakh if it were treated as business income. So now you can understand the necessity of incorporating an income under the correct head. There are several case laws, one after the other, incessantly they flow in, where the issue is ki under which head the income arising from sale of shares have to be brought to tax. Only this issue Under which head should this gain from sale of shares be brought to tax? Capital gains or business incomes? Lethal battles have been fought and reached Supreme Court. So now you can understand the difficulties which we as practitioners of income tax face on a daily basis. Obviously, you will want to include this income as an assessee. You will want to include this income under the head capital gains, whereas the department will consider the same income as falling under the head business income. The battles are bound to ensue, and that too grim battles. It is equally interesting to note whenever the government has made an attempt to simplify the act, it has made it more complex. The provisions of Income Tax Act are bound to be resented. Nobody is going to be happy or happier paying taxes. The assessees, the taxpayers are bound to resist additional attempts at invoking taxability by the government. You are depriving a person of his hard-earned money. You are depriving him to enjoy his hard-earned money. You are taking it away from him under the name income tax, though constitutionally permitted, Article 265 of the Constitution. But then, on a personal level, there is bound to be resentment. There is bound to be opposition. And therefore, the modalities to avoid, if not evade, come up on a daily basis before the government really is able to implement a new section imposing taxability. People have already started thinking of ways to circumvent the new legislation so as to minimize, or they can absolutely eliminate, the new tax. This is human nature and tendency. Another interesting issue which you should know is income tax is chargeable on income. We may, as lay persons, feel that income tax is chargeable only on legal incomes. Those incomes that have been legitimately earned can be brought to tax, because the government cannot be a partner in somebody's crime. Illicitly earned income, generally, a layman would believe an illegally earned income should not be subjected to income tax, because government cannot be a partner with somebody in his crime. The government cannot be complicit, but that's not the case. In income tax, that's not the case. All incomes, whether from legitimate sources or illegitimate sources, earned from moral ways or morally incorrect ways, immoral ways, are all subject to income tax. Why do we say this? The income tax department has not even left the deities, the godheads whom we worship. A deity, a godhead on whom we offer our offerings, maybe in the form of cash or in the form of kind, are also subjected to income tax. So why should the government lose its revenue from illegitimate income? Even the gods are not spared from taxation. This being the case, income tax as an area of practice poses challenges on an hourly basis. A day is a very big time in income tax for income tax practitioners on an hourly basis. When we think that we have understood a section, the section has already changed. So you can understand the predicament of a tax practitioner. For the time being, we will end here. Thank you very much for a patient listening.